afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action in today's session, where it was a mixed day, but underneath the surface, there was one chip stock in particular that garnered a lot of attention today.
That's right, AMD, and yeah, we spent a lot of time with it on IBD Live, but we also took a look at a lot of energy stocks, Targa Resources, and PerkinElmer is one of those medicals that had a tough time today.
Yes, some lessons to be learned there. First, let's take a look at the major indexes. Here is the NASDAQ Composite, which fell about 0.5% by the end of the day. So off of session lows, but off of session highs as well. We also had the Dow up about 0.2%. Small caps really taking the spotlight today, Ed, up about 1.6%. The S&P down about 0.25%. So we're still hanging in there. The NASDAQ is in terms of that 50-day line, which it was able to retake in the latter half of last week.
Yeah, so I mean, it held support there. We ran up a number of days, and so while we basically we're flat on Friday. Now we're, down a little bit, but that still seems fine. This is where you'd like it to find support. Higher treasury yields. It helped the Dow and Russell with the bank stocks, and energy prices also helped those sectors. But the higher yields hurt the NASDAQ, especially the highly valued growth names, because you discount future earnings. And so if you have really high PE stocks, higher treasury yields, that tends to be a negative for them, but still not a big deal. Ultimately, sort of closed relatively mild on either side.
Right. And now taking a look at the S&P 500 as well. Small range today and still holding above its 50-day line. The Dow, which hadn't quite been able to take out its 50-day line last week, now hitting resistance around that level today.
Yeah, I mean, I guess you can say it's positive. It's at least making an attempt. It's been a while since you could even say it's had a chance to. It hit resistance there. So like the intraday gains for the Dow and the intraday losses for the NASDAQ sort of faded a little bit, in part because yields came back down. But, that was not, but, in general, it was still a pretty positive, day for the Dow as well. And the Russell really showed the strength.
Yes. Exactly. With energy and financials doing well, the Russell also taking a pretty big step higher today.
Yeah, so that was nice. So it sort of pulled back a little bit, found support on Friday, and today moving higher. I mean, it's not at all-time highs. It's not even at last month's highs, but it's getting some distance now from the 50-day line again. It's just a positive sign for breadth in the market.
And AMD unbothered by the weakness in growth and technology today, a strong upside reversal up 2.2% on the day, warranting action from both of our swing trader and leaderboard teams.
Yeah, I mean, it sort of broke that trend line, rebounded from the 50-day, and it's even like the short-term levels, you could argue. The last couple of weeks, it's sort of been hitting resistance around, got above those levels. That was nice. There is, maybe after today, it'll finally show a base because it's moved up the right-hand side a little bit. It looks like a double bottom base with a 114.59 buy point. So there's that as well. The one negative isn't that negative. The volume was below average, but as you can see, it was still the best volume in about a month. That was something Justin Nielsen says. If it's sluggish volume, it's sort of like it's still a change in character, at least. I mean, obviously we would have loved to have seen double normal volume, but at least you can point to higher volume than we've been seeing the past several weeks.
Yeah, the highest volume in roughly a month here. So that is good to see. And in terms of the double bottom entry, maybe more traditional slim investors would want to see a double bottom breakout, and we may get that eventually. But we've been talking a lot about how these earlier entries, when the stock is right around that 50-day line or the 10-week line, initiating your position there can help you withstand some of that turbulence that you might see at a breakout area.
Yeah, and I mean, I think it's a good idea, at least as you say, initiate at least. It's when you say, well, not at least, but that is definitely a very strong strategy, either to buy right there or at least initiate. You just have to keep in mind with the choppier and shorter-lived rallies we've had and the tossing and turning. I mean, there's an argument for waiting for that breakout, because if you think you're going to have a long uptrend, you want to get that all that upside resistance. There's still resistance here, but in a shorter rally, then you just have, well, if you only have 10 days or 15 days for the stock to move, you don't want to wait till day 12 to jump in. So that's it. It's been a tricky market in this year, but early entries have been the way to go for the most part.
Yeah, that's right. And even the last breakout, taking profits, at least partial profits quickly, would have been the right way to go here, or else you would have been giving back a lot of that gain. So that's another aspect. If you initiate earlier, you can maybe feel a little bit better about taking profits more quickly as well, because you have a little bit more of that cushion.
Absolutely.
Okay, let's take a look at TRGP, Targa Resources in the oil and gas sector, up 4.2% today, and some above average volume behind today's move.
Yeah, this one was above average, and natural gas, I think, was up like 10% today. And this one was more into the natural gas storage and distribution selling, and that's just been natural gas is just on fire here. I mean, it's just into the stratosphere in Europe. I mean, the prices are enormous. And I think this might have some to do with some of the natural gas liquids. So it might have a little bit of a touch in there. Obviously, some strong action. There's been a lot of energy stocks that are moving. I mean, look, when the underlying commodity is up 2%, 4%, 10% in a day, you're going to see movement in those stocks.
Mm-hmm. And so we have this breakout over the 49 area. So in terms of buying a breakout, it seems like, I mean, this whole group was moving so much today. So this one isn't extended in terms of other group peers being extended now with today's heavy volume gains.
Yeah, I mean, you could argue that you could have bought it, say, last Thursday as a sort of cleared a sort of quasi handle or almost handle, because it was like in there, yeah, somewhere in there. But at least it's not way away from there. And it wasn't high volume on those days. So it would have been hard to really say, I want to buy TRGP today, because it wasn't really moving today. You're seeing some above average volume. It's not tremendous volume, but it's the first up volume day in quite a while.
Mm-hmm. And last but not least, PKI, some lessons in this chart for this medical sector stock, down about 3.4% today, slicing below the 50-day line, below that 180 level. So a clear sell signal today, Ed, but also last week, there were signs that it was time to maybe part ways with PKI.
Yeah, it sort of tried to break out on Thursday, either from a trend line or just getting all the way up to a new high, but then it gave up all those gains. And this was a strong market day. This wasn't like, oh, you can excuse it because the market was weak. I mean, this one really came off. So you might have, if you bought on that day or had bought fairly recently in that sort of area, you might have wanted to lessen your shares. And then the next day coming down, there was no real respite. At that point, it's like, well, you're probably down a few percentage points, depending on where you bought it. So you might have wanted to get out, but you definitely would have wanted to be lightening your load. And then today, coming down, the volume wasn't that tremendous, but honestly, chances are you're down at least 6, 7, 8%. It's not working. And a lot of medicals were bad today. Some of them were more extended, and so their charts don't look bad. I mean, if you have a couple bad days and all of a sudden have another day and the chart starts looking weak. But there was a lot of weakness among medical research firms, test firms, product firms, systems firms, biotechs. Not exactly sure why, but it was not a good day.
Yeah, and this is another example of a time and a place to be in a stock. And when it cleared this 157 area after earnings, or actually that was just ahead of earnings now that I'm remembering, but David Ryan bought, but I guess, he's in a league of his own in that respect. But nonetheless, a breakout right around earnings that led to a very quick advance, but then it hasn't really gone a whole lot. It didn't really go a whole lot higher after that. So again, a time and a place to be in a stock, and a pretty clear sell signal today if you didn't act last week.
That's right.
All right, everyone. Thanks so much for tuning in. And thank you, Ed, for that great analysis. You can be sure to catch more tomorrow morning on IBD Live. Speaking of David Ryan, he will be joining us, a William O'Neill protege, longtime portfolio manager and money manager. So we hope you join us, investors.com/IBD Live. And we will be back here tomorrow after the close. We'll see you then.